All right, so diving into decentralized finance, DeFi, it often feels like, well, like navigating a maze, right?
Yeah.
Especially when you get into liquidity.
Oh, absolutely. Getting assets moving, making sure trades happen smoothly, it's, fundamental.
But it's really complex. How platforms attract and manage that liquidity, that's where things get interesting.
Exactly. And everyone's got a different approach, a different strategy.
Which brings us to today's deep dive. We're looking at THENA, or DH, based on the source material we've got here. Our goal, really, is to unpack it. What is THENA? What's the deal with its token, THE? What are the core parts of the platform? And, what do the specific numbers tell us, like token supply, distribution, that sort of thing?
Getting down to the essentials.
Yeah, cutting through the noise.
Yeah.
So high level first, the sources present THENA as a kind of foundational DeFi piece, a primitive, they call it.
Right. A decentralized trading hub, sure,
Yeah.
but also, critically, a dedicated liquidity layer.
And what problem is it trying to solve?
It seems focused on helping other protocols get that initial liquidity boost, the cold start problem, and then making sure that capital is actually working effectively, not just sitting there.
Got it. So let's zoom in on the AG token itself. Sounds like it's pretty crucial. What are its main jobs, according to the sources?
Well, the material highlights two primary functions. First, and maybe the most obvious one, is incentivizing liquidity
Okay, how does it do that?
through farming rewards. The tokens are basically paid out to people who provide liquidity to the platform's pools.
So you put assets in, you get the back.
Exactly.
Yeah.
It's the carrot to encourage deep liquidity,
Yeah.
which then leads to better trading conditions like lower slippage for everyone using the platform.
Right, makes sense. Direct reward for capital. What's the second big role?
The other key function is enabling decentralized governance.
Okay.
The sources explain you can lock your D tokens. When you do that, you get something called veTHE.
veTHE. And that's not just holding.
No. Locking is the key. It's what gives you a say in the platform's governance, how it evolves. And interestingly, it also gives veTHE holders access to the weekly revenue the platform generates.
Oh, wow. So it ties governance power directly to, like, a share of the platform's success.
Precisely. The idea, or at least the stated long-term goal mentioned, is that this model helps push towards genuine decentralization. It tries to align everyone's incentives.
Yeah, encourages long-term thinking and participation, I guess.
That seems to be the aim, keep people involved in steering the project.
Okay, interesting mechanism. Let's shift focus a bit to the platform itself. The sources lay out several core components working together. What are the main pieces?
Right, so fundamentally it's a place to trade. So you've got your spot trading,
Standard stuff.
pretty much. Direct swaps of digital assets. Decentralized, you keep custody of your funds, and they emphasize low slippage.
But it's not just basic swaps, is it?
No, the sources also mention perpetual futures trading. This is for more advanced trading strategies.
Leverage and things like that.
Yeah, they specifically note over 270 pairs available and leverage up to 60x. So quite a range there.
Okay, so trading covered. Let's circle back to that liquidity piece, which seems central. How does THENA actually handle liquidity provision and management?
So for providing liquidity, they use what's called a Concentrated Liquidity AMM, or CLAMM.
CLAMM, okay. We're seeing those more often. More efficient, right?
That's the idea. It lets liquidity providers, LPs, focus their capital in specific price ranges where most trading happens, potentially higher yield on that capital compared to older models.
Makes sense.
And the sources also mentioned plans for tailored hook deployment with THENA v3. Sounds like more customization options coming down the line.
But concentrated liquidity can be tricky to manage actively, can it? Do they address that?
They seem to. That's where automated liquidity management, ALM, comes in. The sources talk about integrations or partnerships with solutions from places like Gamma and ICHI.
Okay. To help LPs optimize.
Exactly. To optimize and automate the yield generation for them. Makes it easier, hopefully, to benefit from being an LP.
Any other strategies mentioned?
Yeah, they also note planned releases of delta-neutral and directional single-sided vault strategies, apparently in partnership with Lobster, which kind of hints at more sophisticated ways to provide liquidity, managing price risk differently.
So CLAMM for efficiency, ALM to help manage it, and this all feeds back into users earning rewards.
Absolutely. That connects to the yield farming aspect. You put your assets in these pools, you earn passive income mostly through the emissions we mentioned earlier.
Okay, and this is where governance comes back in.
Right, the V33 governance model. Because when you lock your V for veTHE, You get to vote on which specific liquidity pools, they call them gauges, receive the biggest share of those the emissions.
Ah, so veTHE holders basically direct the flow of rewards.
Pretty much. By voting for certain gauges, they influence where liquidity gets incentivized most heavily. And naturally, they can maximize their own rewards if they're providing liquidity to the pools they vote for.
And I think I saw something about a marketplace for votes, like
Yeah.
bribes.
Yeah, the voting incentives marketplace. This is a mechanism where other projects, or maybe large LPs, can offer extra incentives. Bribes is the term used to veTHE holders to get them to vote for their specific pool.
So it's a way to kind of compete for those emissions.
Exactly. It lets protocols strategically attract more votes and therefore more emissions and liquidity to where they need it. It's a way to scale that incentive mechanism.
Right, the classic gauge wars dynamic we see in these V models. Any other features the sources highlight?
A couple more. They list trading competitions, something called THENA Arena. Looks like a gamified way to trade, earn rewards based on performance.
Fun. Anything else?
And quite notably, they mention institutional solutions.
Oh, like for bigger players.
Seems so. Tailored offerings for groups like family offices, crypto hedge funds, market makers. Basically, entities looking for more structured ways to tap into on-chain yield.
Interesting. So they're aiming beyond just the typical individual DeFi user as well.
That's what the source material suggests, yeah.
Okay, let's get into the weeds with the numbers then. The sources provide some specific tokenomics data, focusing around late 2024. What's the overall supply picture?
All right, so as of December 2024, the sources state the maximum supply of THE is exactly 326,120,291 tokens. Max supply.
326 million, okay. And what about circulating supply around the time it was listed on Binance?
At that point, the circulating supply was roughly 233 million each, which, sources point out, is about 71.4% of that maximum supply.
71.4% circulating. But was all of that actually free floating on the market?
Well, that's a key detail. The sources clarify that within that 233 million circulating, a really big chunk, about 146 million ETH, was actually locked up as veTHE.
Wow, 146 million locked out of 233 circulating. That's significant.
It is. And they even give an average locking period for that amount at the time, 1.78 years.
Okay. Any other big chunks within that circulating supply figure?
Yeah, another portion, around 31 million THE, was reportedly held in the ecosystem fund.
Got it. So the actual liquid, easily traded supply might have been considerably less than the headline circulating number suggests due to locking and the fund?
Potentially, yes. That lockup figure is quite high.
What about that specific Binance HO dealer airdrop mentioned? How much was that?
That specific allocation was 21,750,000 DHE. The sources calculate that as 6.67% of the maximum token supply.
Okay. And if we look at the total pie, the overall distribution percentages from the sources, how do they break down the max supply?
Right. The percentages listed are airdrop at 8.13%, that Binance HO dealer airdrop at 6.67%, then emissions. This is the big one, 76.14%.
Whoa, over 3/4 for emissions.
Yeah. Then ecosystem fund gets 6.3%, and the team allocation is 2.76%. But that 76.14% for emissions definitely jumps out.
Massively. That really underlines the focus on incentives, doesn't it? And the token type is listed as BRC20.
Correct. BRC20 is what the SO specifies.
Okay, so let's try and connect all these dots. We have the tokens, roles, incentives, and governance via veTHE. We have the platform parts, CLAMM, ALM, gauges, futures. And now these tokenomics, especially that huge emission rate, how do the sources imply this whole system works together?
Well, putting it all together, it really looks like a system heavily engineered for rapid liquidity bootstrapping and then strategic direction of that liquidity.
How so?
That massive 76% emission allocation is clearly the main engine. It fuels the yield farming, drawing in LPs. The CLAMM and ALM tools are there to make providing that liquidity more efficient, maybe more user-friendly.
Right.
Then locking the L into veTHE does two things. It potentially reduces immediate sell pressure, creating some stability, but more importantly, it activates that VN governance. Holders get to direct where those huge emissions flow using the gauge votes. And the bribe marketplace amplifies that directional control.
So it creates this loop.
It's exactly a feedback loop. Emissions attract liquidity. Liquidity supports trading, locking tokens, controls emissions, and shares revenue, which keeps the whole cycle going and directs capital. It's a design laser-focused on using token incentives and governance to build and steer liquidity.
That paints a clear picture. It's complex, definitely, but based on the sources, the different elements seem purposefully designed to build that liquidity layer they're aiming for.
Yeah, the tokenomics and the platform mechanics described seem very tightly interwoven with that stated goal of being a core DeFi liquidity primitive.
Well, this has been super helpful in unpacking THENA based on the source material. We've covered its positioning as a DeFi hub, the dual role of the 8 token for incentives and veTHE governance, the key platform components like trading, CLAMM, ALM, and yield farming, and then those specific tokenomics with that standout emission figure.
It gives a pretty solid overview from the documents, yeah.
So thinking about all this, especially that V33 model where locking gives power over emissions and revenue, plus that stated rule of true decentralization, here's something to chew on. Given that over 76% of the total token supply is earmarked for emissions directed by veTHE votes, and we saw a large chunk was locked early on, how might the initial distribution and concentration of veTHE potentially shape the platform's direction and the allocation of that massive emission pool over the long run based on the system described in the sources? Something to think about.